Good morning. My name is Scott Rutherford, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. At this point, if you are a VTF member, we are working on a bit of a security issue. We should be up shortly. If you're not and you're just tuning in to watch the morning call to figure out how we could potentially make money this week and where the markets are at, well, let's get right to it. You know, everyone by this point has already read all about the very hot jobs report that came out on Friday, giving the Fed now pretty much a green light to lift off if they want to. I think the percentage odds now is a 75% chance that they, actually go with liftoff, and I think that should probably be closer to 90%. And we'll see what happens. We have a lot of time between now and then. And basically around the world, there hasn't been much of a change. Asia has been strong. It's had a big multi-week move, and it's tacked on more gains. You'll hear at the ASHR, which is an ETF for the Shanghai, and we talk about how it could be a tail or a headwind. Well, during the first quarter, this had a huge move before breaking trend right around, below 5,000. That's when everyone out there started to obsess about China. First move down, it then consolidated, created another move down, and that's what took us into our corrective phase pretty much, late August. So, in September, it went sideways. Everyone was saying how it was going to be a debacle to the downside and continue, but you know what happened? It resolved to the upside. So if you were looking for exposure in the ASHR, this was your first clue right around 31, 32 when it took out this lower pennant. And now look where it is all the way up to about 38, might even be higher, into this up open. So at this point, I think you should be reducing into this 39 area versus just putting a new position on, especially if you're short term. As far as Europe, it's had a really big move. We've been tracking it with the HEDJ. A lot of guys, put on some European exposure when you had this gap and go, taking out this resistance here. Probably would have been better if you did it at the double bottom here, but lots of ways to do it. And at this point, still trending higher in this accelerated fashion. Okay, the next gap to get filled here comes up a little bit closer to 64. But overall, we like to be in things when they're above the 8 and 21 day, and basically the DAX has been above the 8 and 21 day pretty much for the last 4 weeks, so try and stick with that trend. As far as the trends here, you go to the SPX and you will see that, we've had a major move here. Major move since, the double bottom that took place here, around September 29th. Here's your August 24th lows. There is your double bottom. Here's when it cleared that lower pivot, giving you some power. Took out resistance right here. Not only did it take it out, came back, retested it, and look at the move since. And what you see here is the 8-day moving average. When sectors and stocks are above the 8, and here's the 21-day moving average, you try and be long, not short. So the question is, will it be able to stay above the 8-day moving average, which right now you could write down 2,083. The longer we stay above 2,083, the higher the probability come year end we take out this resistance here. If we happen to get it closed below 2,083, you then have very big support a little bit lower, which would still be a strong market. It just means that the speed changed it a little bit, and that comes into 2,060. And I would say, Santa Claus to my chimney, I'd be very surprised if we were to get below this zone, this year. Okay, in the last, 6 to 8 weeks, and I think there's even a high probability that this holds, and we'll see how this holds in the next session or so. If you look at the spiders, very similar fashion here, where it's been following the 8-day moving average, and if you're looking very short term, you want to see this hold. If this doesn't hold, then you have very, very, very big support underneath here. So we'll see if this elevated trend stays intact for us to use as a roadmap, for short-term alpha and trading P&L. About a week or two ago, we talked about what could happen to keep this rally going, to broaden it out. We needed a little bit of participation from oil, from the banks, from the Russell, from the bios, and we've gotten a little bit of all that. And then on Friday, they took a page out of the hawkish playbook where banks were strong, the Russell, was stronger, or that day because of the stronger dollar, so multinationals, get a little scared there, so money rotates. So that's what we're going to have to do over the next 6-7 weeks is rotate to the areas that are on the move, because we just had such a huge move overall in the market that the next portion of it will probably be muted and it'll be that much more selective. So anyway, let's look at the Russell, the IWM. We talked about this pattern here. many times. I was on Bloomberg with my friend Alex Steele. We were talking about the inverse head and shoulders pattern here in the Russell, and it took it out right there and then almost retested it again, and then you had a nice little flag where it actually, closed a lot stronger than some other sectors. So to me, this is saying, you can continue to buy the dip here and even buy higher sometimes. And the next real level in the Russell is closer to 120.50. So we'll see, if we could hold now this 117 area, I think that this could happen. And then who knows, maybe even some higher prices. As far as the banks, huge move on on Friday. Now we'll have to see whether or not it could digest above it for a bit. So what does that mean? You have a gap up here in the XLF, a little extended from all the moving averages. So you want to see it digest above 24.64. There was an article in the Wall Street Journal just talking about how, rates could go up, but it's going to take a long time for it to help the banks make more money with higher rates. So don't get too excited. All that says is maybe we need to see some digestion. And we've been talking about all the different pivots in a lot of the banks well before this. So, take a look at a few of them before we get into the other sectors. JP Morgan, we've been talking about, positioning in, and guys have been positioned somewhat since it took out this resistance here. So into this big move, I wouldn't be chasing it, but we'll have to see if it could reset up and hold this 68.10. If you look at most of the banks, they're all going to have this huge gap. And the question is whether or not it could digest sideways and then take it out for another trade. Most of the time you trim into excitement, especially if you've been long during this trend, and now we'll see whether or not it could hold up. So you look at other stocks, the same type of thing. Look at Goldman Sachs. You had a huge gap up. The stock's been pretty broken. It's well off the highs of the year. Talked about, again, just like most of the financials when they had that nice break. So if you happen to be long thinking you get a hot number, you got paid. Now, same way, you want to see, does this, it's almost like an earnings gap. Can it stay above this, digest above this, and then give you continuation to the upside? If these gaps hold in the banks from Friday, chances are the move that we've seen in the overall market that's been very fast and furious with no pullbacks will probably continue. Then on the weaker side, you had a strong dollar, so what's weaker? Usually oil. Oil leaked a little bit last week, and you had a little bit of a pullback in some of the energy names. So we'll see with today, maybe there's a viable bounce. You look at the USO, not much going on in this overall range. You could draw the bottom end of the range here, and here is your top end of the range. And at this point, a little bit of a lower high, okay, for overall crude. So now you want to make sure that this area holds. If it's USO could stay above, this spot here, which is, closer to 14, I don't think it becomes an obsession. But if it were to break below this, okay, chances are the market might talk about it a little bit. The XLE themselves have had a really nice tradable move. If you trade this ETF, it could make you has had nice action. Here's your double bottom. There's your engulfing bar. Quick move number one, came back in. Okay, then you had this quick move number two into resistance, just pull back. So now at this point for the XLE to be any good, as far as for traders, you would think that this 68.77 holds. So perhaps, if you sold some strength into this area, you buy some back and, make sure it could hold above this area for commitment. It's going to be very hard for it to get to that 200-day, especially if oil continues to leak. So we'll figure that out. And then, technology has been just explosive with, a narrow group of stocks making highs, but other stocks participating. My go-to list, I tend to have the fastest, most active names out there for you to trade. I put it on my note every day with the levels, with what I'm thinking to do, and hopefully, it's been equaling, money for you. So let's just really start with Apple first. Apple, I sold on, I think, Wednesday when I hit 123.50 before option expiration. So I guess I could say I got a little lucky selling the top here. So the question is, does Apple hold this spot? Okay, so today, what's it, down 40 cents? I am not in Apple. I'm going to see if I could buy a little Apple. Okay, here's the thing though. Okay, it has come a long way, from the earnings move. Or remember when we had it at 112.50 here? So this was your earnings move. So the question is, does it go sideways again to give you higher prices into year end? So at this point, it's been following this 8-day moving average, so we need to make sure it holds. That's at 120.18. So I will look to see if I could be a buyer of Apple since sold it here. Versus that, if this were to get a close though below this 120.18, you have a bit of room to the downside. You have this 119 area, which it broke above 119.30, and then real big support comes in closer to this 117.50. So I think this will give us some clues on the overall market too. Do we hold the elevated level, or do they shake the tree up and give us to, this is support 1, support 2, support 3. So that's something to watch today. If Apple opens down 40 cents and closes down $1.20, chances are the market's going to probably pull back. If it opens down 40 cents and goes green and holds, that'll tell us a little bit about the action as well. Then you have the explosive real moves like you had in Amazon and Google. Both had big earnings gaps. Both you could have bought versus those earnings gaps, and then there were pivots along the way. Amazon, best traders by far. Okay, you had the earnings gap. Some guys said the next day after seeing that it held was their time to get long from a swing position. If you're waiting for also a trade, here's when it took out the earnings high right around 620. Okay, oops, hold on. All right, I just drew that. I didn't draw that one the best. I like to draw my lines symmetrical. But anyway, so this is when it took out 620 and then held above, and now all of a sudden, boom, it's up here at 6. Hit as high as, what is that, 662. Wow. Anyway, very extended from the 8-day to 21-day, 3 up days. My rule, day 1, I think you buy. Day 2, sometimes you add. Day 3, you sell. So at this point, just be very careful. Doesn't mean it's a short. Google, I don't think we have a setup here either, except for, the setup again after earnings was you buy versus the gap, okay, which if you did that, you just sat and you've been finding, a great trending move. You had a bit of a pivot buy here, and then you had another one when it took out the earnings high, and now it's holding above it. So lots of different ways to approach this, but overall above the moving average. Not the easiest to trade, but so if you have been, congratulations. Probably the best way to do it was to buy it here versus that gap and then just sit tight. Netflix has come back from the dead. Netflix actually has a setup here, a setup that could be tradable, in the next day or so. Okay. First things first, remember we were getting long here when it took out this lower pivot. I obviously sold too soon. And now, it's going sideways in front of another pivot here. Okay. So I would say let's watch this one today. If it could hold this 110-ish and then get some volume above 115, perhaps it wants to catch up to its FANG friends and either see this 120 or even higher. So at this point, it is on the radar. It's tight. You have a flag type setup here. Maybe it continues. So we'll see what happens there with Netflix. Tesla came also kind of back from the dead on a decent earnings report. Kind of continue higher? I'm not sure, but I do say that once you get a gap up that gets protected, it puts it back on the map, and that's why it's back on my trading radar. So if it could stay above this 229, perhaps there's a move above 233 to get back up into bigger resistance. But there's lots of moving averages here, so it's going to have to show extreme relative strength for that to be the case. And then you go into social media land. Facebook, congratulations if you took those options with me. It was a great play. We actually did it twice. We did the calls into the Google earnings, and then we sold it or expired that week, and then we repositioned before Facebook's earnings, and then on Thursday, or I think, Thursday morning I got rid of my options. I'm not in Facebook, so I'm going to look to see if I could get back in a way that I feel comfortable. This loves to trade with patterns. Last time you had this red dog reversal pullback here to buy, then you had this momentum buy right here, and then I believe we played options from here to here, and then again from here to there. And now at this point, it's trying to prove it could stay above this pivot. Okay, it's probably off a little bit with the futures. So here is, this area that I think should hold and could be buyable. So if you sold into the earnings strength, perhaps we'll let the 8-day catch up and you could be long versus 105.91. So if it gets down there today, maybe it does a red dog reversal, pushes below it, comes back above it. If it were to get below it and have a decisive close down, I wouldn't think it's the best thing, considering you don't want to see some of the gap or all of the gap get filled. But again, it's come a long way, so I wouldn't read too much into that. So we'll see if, 4 points off highs, it's been hard to get that in Facebook, so we'll see if, there's a buyable dip there. As far as Twitter, momentum still not there. It's hanging on by a thread. I do not have a position in Twitter. This 28's pretty big. If it were to break below 28, just be a little careful. This has not acted well. LinkedIn's been, a better situation since earnings. It had a big gap up into it, and then I think Sperling's been trying to trade this one. You had a nice 2-day move above that, and now it's trying to hold again. So keep this on the radar for some continuation. Let's look at the bigger chart here to see where there's some resistance, and it's coming right back into it. So at this point, it's had a huge move too. So I would just take a little care there, but it is trending and acting better. So when those type of things do that, you try and stay with it. As far as gold, we pointed out what was the day the Fed got hawkish again. You had that outside day. It's been absolutely annihilated. You look here at the GLD, boom, that was your signal to sell right when it got rejected at the 200-day again and closed on its lows. And if you got out there, you saved yourself a lot of pain all the way back to the lows of the year. It's up a little bit this morning. I don't know. It's very, very, very oversold, but it's also very, very, very broken. So at this point, maybe it fills this gap, but that's just a tactical scenario. But again, here you want to say how to technicals and bar by bar analysis help you. Well, this outside move right here, definitely said this nice little tradable move is over. TLTs also. TLTs got rejected at the 200-day. If you look to look at bonds or whatnot, right here you had an outside move that led to a downside, another outside move that led to choppiness before getting rejected right here into resistance, and now it's kind of on support. It's a little oversold. Maybe it fills this gap here on a bit of a bounce, but I think these bounces are better to sell, especially if we go into next year. If you want to, try and figure out a way to buy into a raising rate environment, the TBTs are starting to act better again, and now let's see if it digests above this gap a little bit and then takes this out for a move towards, the highs of pre-summer. At the Financial Festival, one thing I was doing is there was an unbelievable amount of macro people there, which is a little different than we are here. I talk about time frame analysis on having a macro time frame with a 401k, a 403b, a 529 for your kid, especially if you're in your 30s or 40s. Then we obviously trade intermediate active trends for cash flow and P&L, and we use technicals and chart patterns and everything else you swirl around. And a lot of the guys here, they're looking at the big picture. They look at the Fed. They look at so many things that we look at it a little bit, but they just look at so closely. And I saw a lot of bright minds thinking that we do get lift off in December, and maybe next year we can get up to 0.75 in the rates. So maybe that means a quarter, and then maybe 2 more quarters, and they think the market will be just fine with that, just kind of like the JP Morgan institutional research that I do read. So perhaps we get a small bump up to show some confidence, to show some small normalization, which would probably get treated decent by the market. So we're trying to figure that out. So if you have too much exposure to bonds, be careful. If you're trying to play rates rising a little bit, maybe the TBTs, and the banks, and then that means a stronger dollar. So it could mean that the industrials have a little bit of a headwind. So that means maybe concentrate more on seeing if the Russell could continue to come back, and technology, which has been the best sector out there. So it's a new week. Well, we're going to figure it out. Earnings are kind of behind us, so we have to get kind of accustomed to all the Fed different speakers that might move the markets, and we'll continue to see whether or not this fast and furious trend off the lows slows down or not. I'll see you at the recap. Have a great day.